Hey folks, good afternoon and welcome to another video from the Go for Stocks family. Uh, Today again, we are going to look at how the market is shaping up for the week ahead. And as usual, we'll start by looking at what the market has done over the last week. Yeah. So this is how the Nifty and the sectors performed. As you can see, Nifty ended the week 1.4% up, but it was not aided by the Nifty IT or the bank. Nifty IT though ended in positive, and the Nifty Bank was flat. What happened was it got good support from Reliance, which comprises a major chunk of this, which has a major weightage in this Nifty oil and gas sector. So Reliance is the main, partner in this case, which helped Nifty make these 1.4% gains and give a breakout above the 18,800 levels, uh, for which at which it was struggling for the last couple of weeks. So among the broader markets, outperformance continued, and in pockets like defense, retail, hospitals, packaging, platform companies, mid-cap IT, etc. These are the sectors which did pretty good. Within defense, we saw companies like HAL and Masgaon doing particularly well. In retail, we saw DMart making a comeback. In hospitals, there were quite a few actually. We saw Narayana Rudalaya and the whole bunch of them doing pretty good. Uh, Within platform companies, we saw stocks like Paytm making a comeback, even Naukri and IRCTC. These are the stocks. India Mart, they have also started to make a move. Uh, yeah, mid cap IT again. Some of the stocks like Zensar and Coforge, they actually started making some small moves. So what did we see in the futures OI reading? So it's the first 2 days saw some short covering. Remember last week we mentioned that there were some shorts getting added at 18,800 futures level. So those some of those shorts got covered, and some long build up started at the 18,750 level. This is again the futures level. The spot level is around 65 points below the futures level. So net for the week, we can say that some long build up has happened um, to the tune of around 8%. And moving on, this is this is the options chain. So as you can see, there's huge support building up at the 17,700 level, where we see the maximum put open interest being added, being open at 17,000, 18,700, and 18,800 also saw the maximum additions on Friday. Over 1 lakh contracts got added at the 18,800. Put contracts got added there. So on the call side, the maximum open interest addition happened at the 19,100 strike, while the maximum open interest is still at 18,800, with some unwinding happening. And this might more unwinding might happen if Nifty starts making new highs and maybe even move towards 19,000 levels. So moving on to the charts, as you can see, this was the level that Nifty was struggling with, which is the spot level, which is at around 18,785. And on Friday, after dilly-dallying for most of the week, even on Thursday, it hinted at it's kind of breaking down, but then on Friday, it made a big comeback and actually closed above this level. So which seems to be a good sign at this point of time. And the next level, of course, that's the next level is, of course, the new high. And moving on, we can actually reach 19,000 levels. 19,033 is the next pivot resistance level on the daily chart. So, in all probability, we might touch, make new highs and also touch this level next week. So, there is one botheration though. This is what I also what I looked at in the morning. So this is the RSI, and RSI is a momentum indicator. This line here, bold line here, is the RSI, which is a momentum indicator. So actually, with Nifty moving higher and higher, the momentum should also be rising, ideally. But in this case, it's not happening. In May, this is the first time Nifty broke out above these levels, right? And it started this up move. You can say that it completed the consolidation. And the breakout actually happened around this time. And at that time, the RSI was probably at its highest point, around 76 odd levels. And as you can see, as Nifty kept moving up, the RSI actually kept falling. And now, very close to new highs, the RSI is down to 67 levels. So this is basically called a negative divergence. So as Nifty is moving up, the RSI is falling. So this is, in technical terms, it's called negative divergence in the RSI, which basically hints that the momentum is slowly getting diminished. But again, for in no, in most technical things, I mean, these also have caveats in place. Like negative divergences are just warnings. Like it's basically telling you that it might rain, and if you're going outdoors, you should carry an umbrella along with you. But there is no guarantee that it will rain. So that's what it is. The only thing is we need to be careful, and that things might slow down from here on. Uh, and But as long as this 18,700 holds, I would say the trend would still remain up in the Nifty. So moving on in the Bank Nifty, this is the daily chart. As you can see, Bank Nifty remained within that zone, so consolidated somewhat. Even though on Thursday it hinted at breaking down, but on Friday again it took support at that level, at the lower level of this consolidation, and then again moved up. So basically, Bank Nifty is in consolidation, you can say, from 43,500 to 44,500 levels, this 1,000-point range. So till it breaks in either direction, we'll have to wait. For the next trend to emerge. Nifty IT. Nifty IT. This is the daily chart, and if you see the weekly chart, you'll see that for the week, Nifty IT has made an inside bar. So what is an inside bar? An inside bar is where uh, the entire range of this week is within the range of the previous week. So as you can see, in the previous week, the range was from 28,320 to 29,530. And this week, the range is from 28,400 to 28,975 odd. So the entire range for this week, that's for this week means for the last week, is within the previous week range. So basically means even though it's up 1% or close to 1%, basically means nothing. It's still, I would say, is looks like, I mean, it's still not out of the woods, and a break below 28,300 levels for the Nifty IT. Nifty IT might go down further. It might, the Nifty IT might look at much more severe bearishness if 28,300 gets breached. So only if I see Nifty IT crossing beyond 29,660 levels would I say that this bearish pattern which has emerged here is kind of a heart, right? So this is a pretty bearish pattern, and so to negate that, it has to, cross above this, the higher end of this particular range, which is 29,660. So till that time, Nifty IT would remain bearish for me. What about Reliance? Reliance was the hero for last week. So as you can see, it managed to close above this 2550 levels, which I was alluding to for the last couple of weeks. It was always going there and falling back, going there, falling back, and then finally this week it managed to give a close above this level, and this is actually what has helped Nifty to move above 18,800 levels as well. Moving on to the mid cap sector, it's making new highs every week. So this is really outperforming. Last week it formed a doji at a critical critical resistance level, which was some kind of an indication that there might be a trend reversal. But this week it has gone past that and has given a close above this pivot resistance, so which is a very good sign. So as long as now this 34,600 level holds, Nifty mid cap is uh, in a complete uptrend. Moving on to the small cap, and this index is about to test its previous highs. This previous highs, it was made in January 2022 last year, so it's almost there. Probably it, along with the Nifty small cap will also make new highs in the coming week. So this is mainly it about the various segments in the market. And yeah, so like I said about Nifty, expect new highs and 19,000 levels to come. But then what after that, what will happen is anybody's guess. We'll see after that whether it can actually build up on its gains. So yeah, this is our YouTube channel, and as you can see, every week we have been posting our market outlook short video, for the last quite a few weeks, and sometimes we also post videos outside that. Like a few weeks back, we had posted a view on the IT sector, where we took a deep dive on the major IT companies. And this we did because we saw a Gartner report saying that the IT spending would not be affected much. In fact, it would rise over the current calendar year. So that is why we looked at the IT sector to see what the stocks were doing, and whether there was anything that we can look at from a investment perspective. And also, we made a small video on the risk management, uh, how risk management drives position sizing, how risk management is core to your, to your overall process, the equity investing process. And so how that should drive position sizing, that is how much of a stock to, buy rather than the other way around. So, yeah, so um, feel free to go through these videos, and if you like our content, please subscribe, and share it with your friends. Recommend your friends as well to subscribe to our channel, and press the like button, and the uh, share as much as possible, so that would keep us motivated to make uh, more relevant content for you guys. Thanks. So this is who we are. We are Go for Stocks, an equity advisory and training firm. Just started a few months back after we got our, SEBI registration. And yeah, even though we've been, trading and investing in the equity markets for a long time, but we started to share our research with you guys. So that's why we got the registration, SEBI registration, and now once we got that, we started this website of ours, which is goforstocks.com. And if feel free to go through it, where you'll also see that we post our blog regularly on the Market Outlook every weekend. We also have a Telegram channel where we post more regular updates, and we also have a fortnightly newsletter. If you want to subscribe to that, so you can go to this contacts page and drop in your email, and you know uh, so we'll be sending the newsletter to your email as well when the next one comes out. Um, and So if you are interested to subscribe to any of our plans, these are our plans. Like, we have three main plans within the uh, equity advisory space, which is the long-term portfolio service, where we actually suggest 15 to 20 stocks uh, for the long term, of course. And but we do review these almost every month to see if something for some bad news or some bad results which might have an adverse impact on any of these stocks. So very actively managed. Then we have a stock of the month. This is mainly for people who want to, every month post, or rather, every month, once they get their salary, they want to invest part of the salary into equities. So for them, mainly, we provide this stock of the month, uh, uh, plan. And these are, again, these stocks are generally from a midterm perspective. Like, holding period would be ideally 3 to 6 months and above. Uh, and then we have the momentumizers. This is for more aggressive investors and traders. So short term, these are basically short term picks, uh, and thriving mainly on sector tailwinds and I mean, sudden buying from big FIIs or institutions, which we can spot. So those stocks we actually post here. Strong stocks, very close to their 52-week highs, primarily are the targets in this case. So yeah, feel free to go through our site, and if you like any of our plans, you can talk to us. Drop in your contact number, or send us an email at sales@goforstocks.com, and we'll be happy to reach out to you. So before we end, these are our disclaimers that we need to go through. So investments in securities market are subject to market risks. Read all the related documents carefully before investing. The securities quoted are for illustration only and not for, and these are not to be taken as recommendations. And registration granted by SEBI and certification from NISM in no way guarantees performance of the intermediary or provide any assurance of return to investors. And very important, past performance is not an indicator or guarantee of any future returns. So with that, we come to the end of today's video, and we'll see you next week. Bye.